At this point, we have already heard from 3 major stakeholders in the regulated Dutch market, but we have not yet discussed the market itself, specifically revenues, growth, market channelization, and such topics. Here to remedy that situation is Josh Hodgson, Chief Operating Officer at H2 Gambling Capital. Josh, welcome. I think you know most people. Please make it to the stage. I think we are all very interested in hearing more about the recent performance, as already mentioned by previous speakers, of the Dutch regulated online market. The stage is yours. Thank you.
Thanks, Willem. Thank you. Good morning, everyone. I'm Josh Hodgson. I'm the COO of H2 Gambling Capital. And today I'm going to provide an update on our analysis of the Dutch market. I'd like to start by thanking Willem and the whole Gaming in Holland team for inviting me to speak to you all once again. And for anyone that has seen myself or a colleague from H2 present before, you'll know that we like to cram as much data into the slides as possible. So please don't feel like you have to keep up and take notes of everything. If you want a copy of the slide deck, just drop your business card with me at any point during today, and I'll get the presentation sent over to you. So I do see many familiar faces and subscribers of ours in the audience, but for those who are not aware of H2 yet, we're the leading authority on market data and intelligence for the global gambling industry, and we provide comprehensive market intelligence for the whole industry, covering 150 markets across market sizing, growth forecasts, regulatory tracking, market share and player surveys to deliver accurate and up-to-date analysis of the global gambling market. So before getting started, I'll just summarize our disclaimer here by saying that sadly, we don't have a crystal ball. So our forecasts reflect the regulatory situation as it is today, with any confirmed changes included as per the official or announced timelines. And our analysts make over 200 updates to all our resources each week to account for all the newly reported data from the likes of the KSA and from operators and suppliers, as well as any regulatory announcements or market developments as and when they happen, to keep the data as up-to-date as possible. So we're going to start with a high-level overview of the European online gambling market before narrowing our focus to the Netherlands specifically. So this context is important because the Dutch market doesn't operate in isolation, and many European markets are facing very similar challenges as to what we are in the Netherlands. And understanding the current regional dynamics helps us understand what is happening at the country level itself. So starting with the trajectory of European online gross gambling revenue split between sports betting and gaming initially, the total European online market, which includes both onshore and offshore revenue here within this data, has grown from 34 billion in 2020 to 68 billion euros in 2025, and we forecast that will reach 97 billion euros by 2030. Gaming, which includes casino games, live dealer games, bingo, and poker, consistently accounts for the larger share of GGR at around 40 billion currently, which makes up 40% of the share of the market. We forecast betting to generate 35 billion of revenue in 2026. If we look forward from 2026 to 2030, we project gaming to grow by 28% to reach 51 billion, whereas we expect betting to grow slightly more strongly at a rate of 34% to generate 47 billion by the same point. But obviously, major sports events are huge factors when considering growth in the betting market. And the World Cup this year, we're forecasting a year-on-year jump of 13% in European betting revenue in this year alone. So if we break down the same European GGR by the onshore, so i.e. locally licensed operators, and offshore, which is unlicensed operators, the wider picture is probably potentially more encouraging than most people would expect if you only use LinkedIn for your market analysis, because the sentiment on there is pretty grim at the minute. But actually, we have a lot of well-regulated markets in Europe, and whilst the offshore market is a significant issue, there are newly regulated markets, the likes of Finland, of course, and many markets that have gone through the initial expansion phase now to get a very strong channelization rate. So we expect that onshore revenue across Europe has risen from like 23 billion in 2020 to 49 billion euros in 2025, and it's forecast to reach 72 billion in 2030, which is an increase of 47%. However, the offshore market has also grown from 10 to 18 billion over the same time period, and we expect it to reach 25 billion by 2030. However, as I mentioned within the forecasts, if we do consistently see more and more regulatory interventions in markets that impact the online channelization rate, that will start to bring these numbers down, and as it has done for many years now, the size of the offshore market we are expecting could significantly grow. So this chart illustrates the European channelization rate for the region as a whole, which is the proportion of online GGR flowing through the licensed onshore operators versus the offshore. So across Europe as a whole, the average onshore channelization rate has been broadly stable at around 71 to 74%, and is forecast to remain in that range through to 2030, without significant gains expected for either the onshore or offshore market as we currently see it. These averages, however, mask significant variation by country, as the next slide makes clear. So this chart ranks the European markets by their onshore channelization rate in 2025. The onshore revenue data here represents the actual reported data from each of the country's regulators where this is available, and the offshore data is our forecast for the market, which is based on multiple sources of monthly web traffic, affiliate traffic, and web search data, as well as data from operator suppliers, as well as our own in-depth player surveys. So in last year's presentation, I went through our methodology in great detail, so I won't bore you with the same again, but if you do have any questions at any point, just let me know, and I'll be happy to provide a full analysis of exactly how we get to that data. Because we're very transparent with how we get to these numbers, and we share the raw traffic data and the survey data, as well as our assumptions and coefficients with our subscribers and the market more widely, to actually allow people to make their own conclusions to the data as well. So last year, obviously we're looking 2025 here, the UK led the onshore channelization rate at 93%, although that would be a significantly different story if we were to look at 2026, given the recent tax changes. And as Pascal alluded to before, that is something that we've worked closely with the UK Gambling Commission, the BGC, and it is something that we are deeply concerned about. But if we look at the next biggest markets, of Italy at 90%, both these markets had long-established, well-enforced regulatory frameworks. Greece, the Czech Republic, Romania, Ireland, and Spain all sit above 80%, which is a very strong rate of channelization. But at the other end, we see Norway and Finland, both currently monopoly markets, where channelization rates of only 23 and 26% respectively, with massive volumes of revenue flowing to offshore operators. Of course, we expect Finland to start making significant advancements up this chart as the new onshore market comes into effect next year. But if we focus on the Netherlands for today, we see that it currently sits at 55% channelization rate. Again, this is 2025 data, so our current data for 2026 does agree with the KSA's assessment of the market in the low 50% range. But what we're seeing is that the Netherlands is well below the European average here. So essentially half of all Dutch online gambling spend is going to unlicensed operators. This is a significant regulatory challenge and the central theme of today's presentation. So with that said, let's turn to the Netherlands specifically. Obviously, the Dutch online market was regulated in October of 2021 when the Remote Gambling Act came into force. But despite initial success and now having several years of regulated operation, the market is facing a number of structural challenges, and they're significantly impacting every aspect of the onshore market. And this chart tells a striking story about the Dutch market. Comparing 2025 with 2023, just 2 years into the regulated regime, the onshore market has actually declined by 14%, while the offshore market has grown by 60%. The total market size has grown by 9%, meaning that all of the growth in the market and more has gone to unlicensed operators. In 2025, the onshore market is at 1.2 billion euros, and we size the offshore market at 1 billion, almost at parity. The KSA's data shows a year-on-year drop of 20% for the onshore market revenue from 2024 to 2025, clearly showing the impact of the increase in tax rates and new regulatory restrictions. However, this drop was slightly less than what we had forecast for 2025 as a whole when I presented at this event last year. This, combined with a clear slowdown in offshore growth in the last few quarters, leads us to believe that the Dutch market is reaching a level of maturity in terms of overall market growth. Overall trends in both internet and affiliate traffic, as well as reported revenues, are showing stabilizations across the board, indicating that the market has left its initial expansion phase post-regulation, and as a result, we're forecasting the total market to grow to 2.5 billion by 2030 at a compound annual growth rate of just 2.5%. The quarterly data gives us a clearer picture of how the decline to date has actually played out. So in Q1 of 2023, the onshore share was 70%. By Q4 of 2024, it's fallen in a largely straight line to the 53 to 54% level that we currently find ourselves. Now, last year, I provided a deep dive on our view of the scale of the impact of each different aspect of regulation and policy on channelization that has been implemented. So this year, I'll be sharing our findings of our player survey, which we conducted in the market in March of this year, to see directly what are the key factors that are influencing player behavior and their choice of use of licensed versus unlicensed operators. Sorry, the quarterly estimates there. So the demand side of the perspective is crucial. Market data tells us what's happening, but consumer research tells us why it's happening. We conducted this survey with a sample of over 600 player responses, and it covers a wide range of player behavior topics. But today, I'll be focusing primarily on issues relating to the use of offshore operators in the market. So if we start, we ask players what the most important factor is when deciding which operator they want to bet with. The top factor that was selected was reputation and trustworthiness at 17%. Now, this isn't too surprising. If you're debiting your hard-earned money onto a platform in the hope of winning more, you primarily want to trust that that money is safe and any winnings will actually be paid. The next biggest decider is the ease of use of the site at 15%, with brand awareness coming in at 13%, and promotions and offers and withdrawing and depositing both at 12%. This shows that players are primarily driven by product quality, user experience, as well as commercial attractiveness. This creates a challenge for licensed operators who are restricted in some of these very areas that players value most, particularly in bonusing. But it also highlights where licensed operators can get ahead by leveraging their brand and trustworthiness, which should be synonymous with being licensed in the market. However, with restrictions on advertising being discussed, it can be difficult for onshore operators to effectively communicate this to a wider audience of players, which we feel is a key factor in keeping players in the onshore market. Next, we asked players if they could actually identify a licensed operator in the market versus an unlicensed one. 60% of players feel they can distinguish between the licensed and unlicensed offer, which means that 40% of players couldn't tell you if they're playing on a licensed or an unlicensed site at any given time. When asked whether they actually check if an operator is licensed in the Netherlands, only 55% say yes, 30% say no, and 15% again say they don't know how to check. This indicates a significant awareness and education gap. Many players are gambling with unlicensed operators either knowingly or, more concerningly, without knowing. This seriously undermines the consumer protection objectives central to government policy. Now, if we take the players that we surveyed exactly the same and ask them if they use licensed or unlicensed operators, 62% say they only use locally licensed legal operators. However, 15% report using a combination of licensed and unlicensed operators, and 6% say they only use illegal offshore operators. As we already know, 15 to 17% say they don't know whether the operators they're using are licensed or not. So in aggregate, this tells us that up to 38% of Dutch online gamblers may be using unlicensed operators to some degree. We feel this is consistent with our market-level channelization data and other data provided by the KSA, and it underlines the real scale of this challenge. So, why do players go offshore? When we directly ask players who say they do use unlicensed operators, why they do so, The leading reason for using unlicensed operators, cited by 27% of players, is better bonusing and promotional offers. So the better product offering is second at 16%, followed by better odds and pricing at 14%. Now this isn't surprising, given there are some offshore operators now offering return-to-player percentages of 100% for some slot games. With no tax burden or regulatory costs at all, they can offer seriously competitive return-to-player percentages and odds. 13% of players said the reason they leave the market is because they are blocked with locally licensed operators, and another 13% say because they are on crooks, they leave the market, so they have been directed offshore as a result of problem gambling interventions. This last point is particularly concerning from a harm minimization perspective, but the overall picture is clear. Significant restrictions on licensed operators, particularly around bonusing and product range, are significant factors that are pushing players offshore. So, with ISP blocks in place, how are the players accessing these sites? Well, the answer is fairly easily. 66% of players who use unlicensed operators use VPNs to do this to some degree. Among those who use unlicensed sites, 16% always use a VPN, 50% sometimes use one, and only 34% never use a VPN and use other methods of accessing offshore operators. So a significant portion of offshore gambling activity requires players to actively circumvent the access restrictions within the market. The relatively high VPN adoption rate shows that blocking measures alone are insufficient to prevent players from reaching unlicensed operators. Motivated players will always find a way around them. One of the most significant developments that's driving offshore growth is the emergence of crypto casinos. Web traffic data across 5 markets, so Denmark, Finland, the Netherlands, Norway, and Sweden, shows that traffic to 5 major crypto casino operators grew from just 10 million visits in 2021 to 128 million visits in 2024. Their share of the total offshore web traffic rose from 2% to 25% over the same period. Crypto casinos are attractive because they offer massive bonuses, no deposit limits, incredibly attractive RTP percentages, and the biggest brands are now very well known and, crucially, trusted amongst players. They have dramatically expanded the supply of offshore options available to players, and they're extremely difficult for an onshore operator to compete against in several of the key areas that matter most. So, what can we take from these findings? The Dutch market's channelization challenge can be understood through 3 interconnected lenses. Attractiveness, which is how appealing is a licensed product relative to offshore alternatives. So on this measure, the licensed market is significantly losing ground. Restrictions on bonusing, product limits, deposit caps, and significant tax burdens are making it incredibly difficult for onshore operators to compete with their offshore counterparts. Awareness. So do players actually understand the difference between a licensed and an unlicensed operator and why it matters? And the survey data suggests that awareness in this area is seriously limited, and consideration of how to improve this could make a significantly positive difference in the market. And finally, accessibility. How easy is it to reach offshore operators? This one is very straightforward for players with VPNs and crypto casinos, and it's never been easier. All 3 of these factors must be considered when understanding and quantifying the threat of the offshore market and what it poses to the industry. And policymakers and the industry can work together to effectively address these key areas, which are resulting in losing players to unlicensed operators. So I'll leave you with 3 key takeaways. First, it's very clear that onshore restrictions and tax increases have made the licensed products significantly less commercially attractive, resulting in a decline in the onshore market and a corresponding increase in the illegal market. Second, the onshore and offshore markets are essentially now at parity, a remarkable and concerning development for a market that had been performing very well at 70% channelization rate until just 2 years ago. And finally, consumer decisions are driven primarily by product quality, better odds, better bonuses, and better user experience, rather than just the regulatory status of an operator. So the message is clear. A regulatory framework that makes the licensed product significantly less attractive than its offshore counterpart will result in players knowingly or even unknowingly leaving the regulatory environment that has been put in place to keep them safe in the first place. So I'll say thank you very much for your time today. If you have any questions, please feel free to reach out to me at any point. Thank you.
Thank you, Josh. Very interesting. I think we have one question from the audience.
Sure.
It's all about data. And we had here the KSA thinks approximately 90% of players is only active in the licensed market.
Yeah, it is an interesting stat, this, because I think it's not what our survey has shown in terms of players, where we have around, I believe, 80% of players that, 60% of players saying they only use licensed operators, but there is a bucket of players that use both. So again, depending on survey timing and things like that, I think our data would suggest that there are more players sometimes using offshore operators. And again, there are a smaller percentage, around 6% of players that are only ever using offshore operators. These are actually likely the highest spend players as well. So the players that are disproportionately impacted by restrictions such as deposit limits are the ones that are significantly higher risk. And they also make up a greater percentage of the actual revenue in the market, which is why we see the channelization figures being so much lower than this 90%. But I think from our findings in March of this year, we would think that potentially a larger percentage would be using offshore operators to some degree.
Okay, well, let's follow that topic. Josh, thank you very much for joining us. Thank you. Thank you again.
Thank you.